Hey, what's going on, guys? What's happening? YouTube, you guys have tuned into Rules for Rebels. We're going to take a break from the COVID vaccine mandate business stories and get back to our roots and do an e-commerce story. In today's video, we're going to be talking about Buy Now, Pay Later, or BNPL, as many people are referring to it. Buy Now, Pay Later. You know what? Actually, let's start this off by saying a couple reasons I think this might be interesting to you guys. If you guys are shoppers, you can be aware that these types of plans exist. For those of you guys who are investors, this seems to be a booming business. It's been growing for a couple years, but especially this year, this business has exploded. Jack Dorsey's Square, which owns Cash App, just bought, who'd they buy? They bought Afterpay for $29 billion this past Sunday. So for those of you guys who are investors, this could be an interesting area to invest in. And also for those of you guys who are e-commerce professionals who have Shopify stores, buy now, pay later apps or buy now, pay later financing typically allows businesses to see higher conversion rates, less abandoned carts, higher AOVs or average cart values. So you're going to be getting, people spending more money at your store. So overall, this is a win for businesses, even though this will cost you a little bit more money than traditional merchant processing. All of these different apps, whether it be Klarna, Afterpay, Sezzle, charge different rates, have different structures in terms of when the loans need to be paid back. But essentially what these are, it's, assuming you pay them back, on time, it's 0% interest or 0% financing for customers. And here's what's kind of interesting about this, right? Like the idea of credit has been around for forever. There's really nothing interesting about credit, but these companies have managed to make it kind of hip, easy, simple to understand, and have really done a good job of integrating with Shopify stores and getting a lot of companies on board with them. Now, those of you guys who run e-commerce stores and are thinking to yourself, yeah, I have an e-commerce store, but like most of the items on my store are under $50. Nobody's going to be, financing a $39 backpack or whatever it is you sell. I think you would be surprised how broke people are, how stupid people are, and how much people will finance. One of the kind of sets of e-commerce stores that I'm running, it's 3 or 4 stores, but they're doing over $1 million in sales per month. And, I think one store is doing about $25,000 in sales a month through through Sezzle. The others are doing anywhere from $15,000 to $25,000 on any given month. Well, the stores that I work with do sell products that are $200 or $300. The average cart value is something like $70. And a lot of the items that they sell are $33, $34.95, $40. And one thing that I've been shocked by is the amount of people financing items under $50. And another thing that's really blown my mind, when I'm going through transactions and looking at the Sezzle reports at the end of the month, there is like a huge number of people financing $8 items, $10 items, $12 items. The idea that somebody's going to split a $10 purchase into 4 payments of $2.50 is insane to me. Initially, I thought, somebody must have done this on accident or something like that. But I see it happen time and time and time again. And people are definitely using these financing options. So for those of you guys, again, not familiar with this, check out companies like Afterpay, Sezzle, and Klarna. And, it might be something you want to add to your store. It's really easy to set up. If you guys have any questions about Buy Now, Pay Later, how it works for customers, how it works for merchants, feel free to drop a comment down below, and I'd be happy to either answer the question, or if you guys would like to see a video kind of going into more depth about this, I'd be happy to do this as well. But let's hop into this article. Again, this one comes to us from NBC Palm Springs. Buy Now, Pay Later is becoming a huge business. Want to buy a new coat without shelling out the entire cost up front? For shoppers, that's becoming an increasingly popular payment option, generating a windfall for the handful of companies that facilitate such services. And here's one thing that I meant to mention at the beginning of this, but one thing that's really kind of blowing my mind. PayPal has been offering financing for probably 10 years, if not 10 years, at least for 5 years, 7 years. But with these, the PayPal one was always kind of like, it was a pain in the butt to apply for. The approval rates weren't that good. The whole system was kind of very complicated. I think they said no interest for 6 months. But the whole system was very complicated. If somebody used PayPal credit and then did a return, it was a shit show for both the merchant and the customer figuring out how they get their money back and where the money goes to. Where these apps like Klarna, Sezzle, etc., seem to have kind of simplified the process. This is typically short-term financing, so it's like you're going to make a quarter of the payment up front, a quarter of the payment 2 weeks later, another one 2 weeks after that, and another 2 weeks after that. So it's typically about a 6-week payment plan. In terms of the different options, I've always used Sezzle. Pretty much all my clients use Sezzle. I've been using it for about 2 years, and at the time, Sezzle was one of the first ones out there. Sezzle, in my mind, they still probably have the best name recognition or the best brand. But especially back then, they were one of the fewer ones out there, and they were the biggest name. I am regularly contacted by Klarna and Afterpay and a lot of other companies offering me lower rates and things like that. But I've kind of stuck with Sezzle just because that's what we have set up. Typically, you're going to pay anywhere from like 4 to 6%. So this is going to cost you probably 2 to 3 times more than your typical merchant processing. But again, most merchants do experience higher cart values, less abandoned carts, etc. So getting back to the article. What's happening? Square, which owns the Cash App, announced on Sunday that it's buying Afterpay for $29 billion, the largest acquisition of an Australian company ever. Meanwhile, Sweden's Klarna raised money in June at nearly $46 billion valuation. Affirm, a San Francisco company that went public earlier this year, is now valued at nearly $15 billion, and its stock is up 8% in pre-market trading. How it works, these companies partner with retailers like Target, H&M, Sephora, Macy's, and ASOS online or in stores to offer customers the option at checkout to pay installments. And it's not just big companies like H&M and Target. Any little drop shipping company can typically use these services. So this isn't exclusive to big retailers. That lets shoppers snap up a $200 handbag for the cost of just $50 initially without having to undergo a credit check. The remainder is paid off in chunks over the coming months, often without interest. And typically it's not over the coming months. In my experience, it's normally every 2 weeks. So you're looking at probably maybe a 6-week, maybe a 2 or 3 month payoff period. A firm like Afterpay covers the entire cost right away for the retailer, less fees. So-called point-of-sale lending has existed for decades, but the service has boomed alongside the spike in online shopping during the pandemic, which also ushered in significant financial instability for many households. Now, one thing I just wanted to cover before we continue with the article, I'm sure a lot of you guys are like, how are these companies making any money offering 0% interest loans? Well, first off, if somebody doesn't make their payment 2 weeks after, 4 weeks after, and 6 weeks after their purchase, they're probably going to pay a hefty interest fee. I'm not really sure exactly what that interest fee is, but I'm sure it's pretty hefty. But here's how these companies are making money, even if everybody is paying off their loans and not paying interest, which obviously isn't happening. I'm sure many people are paying interest. But if I use Sezzle and somebody buys an item from me for $100, Sezzle is going to charge me 6% or maybe even a little over 6%. So I'm paying $6 to Sezzle. So essentially, Sezzle is giving a $100 loan that's only costing them $94 to give. So if the customer winds up paying back the whole $100 on schedule, they made $6 off me, the merchant, they made 6%. Then obviously you're going to have customers who aren't going to pay their payments in time, and then they're going to be making a bunch of interest as well. So that's how these companies are making money. Getting back into the article, according to Adobe, Buy Now, Pay Later experienced a 215% year-over-year growth in the first 2 months of 2021. Its researchers noted that more retailers are signing up, which makes sense, given that consumers using the service placed orders that are 18% larger than shoppers who don't. And let me know if you guys are seeing this with retailers that you shop with, or if you run an e-commerce store. Let me know if you've used a Buy Now, Pay Later app on your store and what the result has been. Trends fueling growth include digitization, rising merchant adoption, increasing repeat usage among younger consumers, and an expanding set of players, McKinsey said in a report published last month. Taking notice, PayPal rolled out its own service last year. On the company's earnings call last week, executives said Buy Now, Pay Later product logged $1.5 billion in payments in its most recent quarter, and that more than 7 million customers have now made over 20 million transactions. The veterans who have historically controlled the payment industry are paying attention too. McKinsey estimates that the popularity of Buy Now, Pay Later options is diverting up to $10 billion in annual revenues away from banks and I assume credit card companies and merchant processors. Some warnings. Consumer Reports cautions that customers should be careful to know what they're signing up for. While many buy now, pay later companies offer zero interest loans, tempting for those looking to rack up credit card debt. A number have interest-bearing products as well. Actual terms can also vary by retailer, while paying installments late may incur fees. Regulators are starting to watch this space. Earlier this year, the UK Financial Conduct Authority said buy now, pay later credit agreements would now be part of its portfolio. Although the average transaction tends to be relatively low, shoppers can take out multiple agreements with different providers, the agency said. It would be relatively easy to accrue around £1,000 or $1,391 of debt that credit reference agencies and mainstream lenders cannot see. There's more, with several buy now, pay later providers planning to expand to higher value retailers or offer their products in store. The risk that consumers could take on unaffordable levels of debt is increasing. Let's see if we got comments, because I always like comments. Doesn't look like we do. But let me know your guys' thoughts on this. As a consumer, have you ever used a buy now, pay later option? What made you use it? Did you pay it off in time? Would love to hear your guys' experiences. And for those of you guys who run e-commerce businesses, who have e-commerce stores, have you used buy now, pay later? Is it something that you've thought about? What has your experience been? Would love to hear from you guys as well. So drop your comments down below. If you guys enjoyed today's video, give it a thumbs up. If you're not subscribed to the channel, click that subscribe button below and be sure to ring the bell. Thanks for watching, and we'll catch you guys on the next video.